very good morning to our distinguished guests, industry leaders, policy makers, and esteemed delegates. On behalf of the Bombay Chamber of Commerce and Industry, it is my privilege to welcome you all to this conference on enhancing insurance penetration and density in India, a subject that is deeply connected to the financial well-being and resilience of our society. Just last year, when Cyclone Biparjoy impacted parts of Western India, many families, farmers, and small businesses faced sudden disruption and financial uncertainty. For those protected by insurance, recovery was faster and less devastating. That moment served as a powerful reminder that insurance is not merely a financial product. It is a social safety net that protects aspirations and livelihoods. Enhancing insurance reach is therefore not just a sectoral objective, it is a national imperative. This is precisely why this topic was selected for today's conclave. We hope it provides a valuable platform for all stakeholders to exchange ideas, explore innovations, and shape strategies that can accelerate inclusive insurance growth in India. Now, before I invite Mr. Praveen Vasishtha to present the welcome address and opening remarks, a few words about him. Mr. Praveen Vasishtha is member BFSI Committee, Bombay Chamber, and former co-founder Howden Insurance Brokers India and chairman Howden Asia. A management trainee of the 1983 batch of GIC, Mr. Vasishtha has worked for the insurance, financial services, and risk management industry for nearly 42 years. After working for the public sector for 14 years, he joined Zurich Insurance Group in 1997 and was the CEO of Zurich India until 2003. He then co-founded Howden Insurance Brokers in India with the UK-based Howden Group. He served as the regional chairman of Howden Asia, as well as Middle East and Africa, and was on the global board of Howden Group in UK. He is also a member of the Reinsurance Advisory Committee constituted by the IRDAI. A huge round of applause for Mr. Praveen Vasishtha as I welcome him on the dais.
Thank you. When you said I'm from the 83 batch, I felt like a fossil. Good morning, everyone. Shri Swaminathan Iyer, Member Life Insurance, IRDA. Srimati Girija Subramanian, CMD New India. My dear friend Amit Roy, Senior Practice Leader at PwC, who have been our knowledge partners, and this is something that we gratefully acknowledge. Distinguished speakers, guests, ladies and gentlemen, a very warm welcome to each one of you at the Annual Insurance Summit of Bombay Chambers. Well, I see some familiar faces, including some very dear friends of mine in the room. Some of you were here last year as well. Either you found it genuinely useful or the networking lunch was very good. I choose to believe it was both. Last year at this very summit, I spoke about where the Indian insurance industry stands, the impressive growth, the ambitious target of insurance for all set by IRDA, and the sobering reality of a low penetration. I'll not repeat all of that today. You have much more interesting speakers lined up for that. But allow me to touch briefly on 2 points that I made last year because they remain as relevant today as they were then. First, our penetration numbers. India's insurance industry, in terms of penetration, stands at 3.7% of the GDP. The global average is 7.3%. 3% for life, And in life, we are 2.7%, so we are more or less not very far behind the global average, and 4.3% for non-life. Our density, the premium per person, is about $97 compared to a global average of $890. Now, these are not just statistics. They tell us that a vast majority of Indians remain exposed to risks with no financial safety net. And perhaps more worrying is the trend. Penetration in life insurance at 2.7% has actually been slipping, not rising. But with Mr. Swaminathan Iyer here, I should hasten to add that the density, I believe, has gone up by a couple of dollars last year. So what is the key takeaway? While India punches its weight in absolute premium volumes, accounting for 1.8% of the global market share, its penetration rate, especially in non-life, where we stand at 1% as compared to the global average of 4.3%, remains well below the global average, pointing to significant untapped potential in the market. Second, I want to very quickly touch on the protection gap. Now, India's overall protection gap, including life and non-life, admittedly, as also mentioned by Chairman IRDA some time ago, is 70 to 80%, and I quote him. In non-life, protection gap ranges from 83% to 92%. These are Sigma figures, and Amit, the other Amit from Swiss Re is here. We used to play golf, I reminded him today, many, many years ago. So, meaning that the vast majority of non-life risks remain uninsured. In the health insurance segment, currently only about 50% of India's population is insured, leaving roughly 40 to 50 crores individuals without any formal health insurance safety net. And nearly 93% of India's exposure to natural catastrophic events is uninsured. On the life side, the mortality protection gap, quoting Sigma, stands at over $40 billion in premium equivalent terms. This gap is not just a business opportunity, my dear friends. It represents millions of families that are financially vulnerable. Bridging this gap, in my view, is a national imperative. I'm glad that we're meeting again today with an agenda that takes these concerns seriously and focuses on what we can actually do about them. This year's summit is built around an overarching theme that is enhancing insurance penetration and density in India. Now, both are dependent on effective distribution, efficient technology, sound product offering, and customer servicing. In this context, we want to focus on three big themes. First, technology. Second, products. And third, reinsurance. These are not abstract themes. Each of them has a direct bearing on whether we can move the needle on the penetration and close the protection gap. Now, let me say a few words on each. Let me begin with our first panel discussion on technology, because it is the one area where I see the most excitement and also the most confusion. When people hear the words artificial intelligence, the reaction tends to be one of two extremes. Either breathless enthusiasm, AI will solve everything, or deep anxiety, AI will take away everyone's jobs. The truth, as usual, lies somewhere in between, and it's a good deal more interesting than either extreme. In insurance, data and technology have always been central to the business. Actuaries have been doing sophisticated statistical analysis for decades. What has changed is the scale, the speed, and the granularity at which we can now process information. AI can now be deployed across every stage of the value chain, from customer acquisition, risk selection, pricing, through to claim settlement and portfolio governance. Take customer acquisition and distribution, for instance. AI can help with ecosystem propensity modeling, vernacular voice interactions in multiple languages, agent co-pilot with real-time recommendations, etc. Digital platforms and aggregators have made it possible for a farmer in a remote village or a gig worker in a city to buy insurance on their phone in a matter of minutes. We have insurtech companies in our panel today, and I'm curious to hear their perspective. on where this is heading. Now let's take underwriting. Traditionally, the underwriting of a health or motor policy relied on relatively basic information: age, medical history, vehicle model, fuel type, age of vehicle, etc. Today, with better data, we can understand risk far more precisely with far more granularity. Satellite imagery and weather data can inform crop insurance. Telematics data from vehicles can power usage-based motor insurance. Wearable devices can enable more personalized health insurance. Hyper-personalization is a word that we come across very often in this context. These are not distant possibilities. Some of them are already happening. On the claim side, AI-powered tools can help detect fraud faster and settle genuine claims much quicker. Now, this is good for the honest policyholder who does not have to wait weeks to be reimbursed, but it is also good for the insurers who can reduce leakage. The customer experience around claims, which has historically been insurance companies' biggest vulnerability, can be dramatically improved now with AI. But I would also add a word of caution. Data is only as good as what you do with it, what we do with it. And there are important questions of data privacy, algorithm bias, and model risk that the industry will have to grapple with. Using AI to automatically reject claims or decline coverage based on opaque algorithms is not progress. It is just old problems wearing new clothes. It'll be interesting to get the IRDA's perspective on this as well, if you can, sir. The second panel discussion today focuses on product innovation, and I think this is one of the most exciting conversations we can have. For too long, and pardon me for saying this, insurance products in India have been designed around regulatory compliances, loans advanced, and distribution convenience rather than genuine customer need. The result is products that are difficult to understand, difficult to compare, and sometimes difficult to claim under. Now, this is a perfect recipe for low penetration and poor customer trust. But the good news is that this is changing. We are seeing innovation in several directions. Micro-insurance products designed for low-income customers at price points they can afford. Parametric insurance where payouts are triggered by objective, measurable events such as rainfall levels or wind speed, rather than requiring lengthy loss assessments. Products designed specifically for the platform economy, covering gig workers and freelancers who do not fit the traditional employment mold. One area where I'd like to see more innovation is the interface between health and life insurance. Now, I do appreciate that there are regulatory constraints here, but maybe someday. Many people do not fully understand the difference, and the protection gap in both segments is significantly low. Can the industry design simpler, bundled solutions that address both life and health needs in one product? Can we make renewals simpler so that people do not inadvertently lapse their cover? Now, I do not have all the answers, but the leaders joining us for the panel discussion perhaps do, and I look forward to that conversation. The last panel discussion this afternoon is on reinsurance, the financial backbone of insurance. It is what allows insurers to take on large or complex risks without putting their own solvency at risk. It is what makes it possible for the industry to cover catastrophic events. And as India's economy grows and its risk profile evolves, more urbanization, more infrastructure, more exposure to climate-related events, the role of reinsurance becomes even more important. India's reinsurance market is an interesting cusp. It's an interesting juncture. GIC Re, our domestic reinsurer, has been building capacity and capabilities. International reinsurers, Swiss Re, Munich Re, Hanover Re, Lloyd's, and now a newly licensed reinsurer, Valuatics, have been deepening their presence in India. There is a healthy tension between the push to develop domestic reinsurance capacity and the need to access global capital and expertise for large and complex risks. The legislative changes that were proposed last year, including provisions for composite license and greater foreign investment, have the potential to reshape the competitive landscape significantly. How the reinsurance market responds to these challenges will have a direct bearing on the cost and availability of insurance in India. We have admittedly witnessed a rather benign, I think too benign a reinsurance renewal season on 1st April 26, both in terms of pricing, which was really very, very soft, and capacity. Is this likely to continue, or could we see a hardening next year? Time will tell. We have an exceptional panel on this topic this afternoon with leaders from Swiss Re, Munich Re, and Lloyd's India, amongst others. I look forward to hearing their perspectives on where the market is headed. Now, let me close with a thought that attempts to tie all our themes together. And this goes at the very root of insurance. Insurance at its best is a simple idea that people can pool their risks so that none of them has to face a catastrophe alone. It is one of the most powerful tools we have for building resilience at the level of the individual, the family, the business, and the economy as a whole. India is a country of enormous aspirations, as we know. We want to be a developed nation by 2047. We want to lift hundreds of millions of people into the middle class. We want to build world-class infrastructure. And none of this is possible without a strong, deep, innovative insurance industry that can protect what we are building. Today's summit is a small contribution to that conversation. We have an outstanding set of speakers, panelists, and participants. I'm confident that the discussion today will generate insights and ideas that go well beyond this room. I hope you have an informative, stimulating, and occasionally provocative morning, and I promise the lunch will be good. Thank you for your attention. Jai Hind. Thank you.
Thank you, Mr. Vashisht. With that interesting start, we can look forward to a very insightful conference.